everyone, how are you? It's Leah Coss with the Mortgage Center, and I wanted to go over what is this self-employed stated income program. So for all of you who are self-employed, or if you've ever heard of a stated income program, I'm going to quickly explain to you what that is and who can qualify. Now first off, right off the bat, if you are an hourly person, a salary person, if you are employed by somebody, with exception to people who maybe are 100% full commission, that would be maybe the only exception. But if you are employed by someone, you cannot do a stated income program. You make an income, the government wants to know, or the banks rather want to know how much you're filing to the government, and that's going to be what what's used when you qualify to get a mortgage, that income that you're declaring. If, however, there's a fuzzy line on how much you make because you're self-employed and you have a lot of write-offs and perhaps even some cash jobs because you're a painter or contractor or something of that sort, then there is a program available which is the stated income program. Now first off, if you're going to document your income, if you're able to document your income, that's always the stronger way to go. And by documenting your income, you actually get to add 15% back to your bottom line. Not that much, but it is something. It helps a little bit. And you only have to put 5% down. Okay, so there is that. It's not a program. It's just a standard product that you can get at any bank. Now, it's important to note, though, if you're, say, writing off so much stuff, you're only really making 10 or 20 grand a year, and that's not going to afford you the $500,000 home that you want, well, there is another program, and it's called the Stated Income Program. A couple of things that are important to note. One, you're probably not going to get the best rate using a stated income program. Why? Well, for one, not every bank does a stated income program. Two, there's often a premium for doing a stated income program that's attached to the rate, so it increases the rate. And then three, you're actually having to put 10% down when you use a stated income program. So with all of that said, if it's still something that you feel, I have no other choice, I have to use this, then just note, we're not going to be getting you the best rates available out there unless one of the lenders who happens to do stated income, who doesn't add a premium, has the lowest rates on the market at that particular time that you're looking, then yes, you can get the lowest rate. But otherwise, you're going to get competitive rates. You're going to get a very good rate. It just won't be the best rate that's out there. Also note that you need to save up more money. To do this, you need more skin in the game, a little bit of a safety buffer in the bank size, and it's now a government mandate, so there's no way around it. There's no bank that still just does 5% as it was before April of 2010. Now you need 10%, cut and dry, hard, fast rule. Okay? Now, how do you deem a reasonable income to state? Well, you can't just pull this number out of your butt. How they're going to determine this is they want to see, if you're a sole proprietor, first off, they're going to want to see your T1 generals. They're going to want to see your statement of business activity, what your gross revenue was, because obviously that's the most you'll be able to state. You can't be making $50,000 in gross revenue and declaring $70,000 in income. That's ridiculous. That's not realistic. It's not reasonable. But if you're having $70,000 of gross revenue, it is possible for you to declare a stated income of $50,000. Absolutely. Now, how do they deem whether that's a reasonable estimate as to what you take home? Well, on your statement of business activities, it's going to show what are you writing off. Are you writing off your car? Well, that's kind of a personal expense, something that you wouldn't have been taking into account if you were working for an employer. That's kind of personal income. Are you writing off part of your mortgage or rent or hydro or internet and your cell phone bills and all these things that you're writing off, entertainment and food and all that? They're going to look at that, and that's going to help them to see what is reasonable. They will also take into account what industry you're in. Now, don't expect to be able to get sky's the limit on this, but if you are something where cash is a part of your business, they will understand that. So there are times where if you have $60,000 in gross revenue, we can state $60,000 of income to help qualify you. And those are just very specific to the industries. Now, where is a cusp? Where do banks start getting nervous with stated income? Once you hit about the $60,000 stated income area, they start to get a little more scrutinizing of your numbers. If you state $50,000 or $40,000 or $60,000, they're okay for that for the most part, even $70,000 sometimes, again, depending on what your gross revenue is in the industry that you're in, and 2 years of track record of this as well. You can't just be new in the business. You need 2 years. But once you get over like the $70, $80, $90,000 mark, they're going to start looking at your numbers that much closer. Because now we'll leave it at that. We won't get into the details. But once you hit over that kind of benchmark, they're going to start scrutinizing, is this realistic? Are you sure you make $90,000? You're a sole proprietor, you work from home type deal, or do you have multiple employees? Are you really actually capable of making $90,000? So they're going to start to scrutinize you a little bit more. But that is an option for you. If any of you are looking to, or if any of you are self-employed and you're sitting there going, geez, I write off my income so far down to like nothing, how am I ever going to afford a mortgage? Well, there is a way. There are programs out there. All you need is a mortgage broker who actually knows what they're talking about and has dealt with that before. I used to own my own manufacturing company, so because of that, coming from a self-employed background, and even now I'm self-employed, it's definitely something that I understand, and I help out self-employed people every single day to help them with just questions in general, to help get them, this is where we're starting and this is where they want to be, and we'll help build a plan to get you to where you want to be, to buy the home of your dreams. And for those of you who are ready to go right now, you've got 2 years in your own business and you have decent gross revenues, then give me a call and we will see how far we can go with you and what you can qualify for. So Leah Coss with the Mortgage Center. Hopefully I will be talking to you soon.